That's what the Fed is stepping into now. They are forced to cut into an accelerating consumer price inflation environment, and this is making them nervous because they know it can't work. But there's nothing else that they can do, because if they don't, the banks are going to collapse, and if they do, the dollars are going to collapse, and they're headed into that choice now. That's where
You're watching Silver News Daily. Subscribe for more.
The trap has sprung, and this time there's no way out. Behind closed doors, central bankers are in full-blown panic. The dollar is falling, inflation is resurging, and the very institutions meant to protect the system are now racing to destroy it. They've just slashed rates again, while inflation is still climbing. Why? Because they're terrified. Terrified that the banking system will collapse before the public even realizes what's happening. But here's what they don't want you to know. Once confidence in the dollar vanishes, it's over. Every fiat promise, every asset built on trust in that paper currency, gone. That's why gold is ripping higher. That's why silver is surging toward $45. And that's why this analyst is warning. We're just weeks away from a financial event that could make silver the only surviving form of money for an entire generation. So what exactly is happening behind the scenes? Why are central banks making moves that seem suicidal? And why is silver positioned to rise from the ashes of a collapsing dollar system? Stick around, because by the end of this discussion, you'll see why the global financial pyramid is about to vanish. And silver may be your only escape.
Well, you're talking about the yield curve or the yield spread. So if you look at the yield spread, or you can look at either the 10-year minus 3-month or 10-year minus the 2-year. When money is tight, then the curve generally goes negative, or in short-term rates are higher than long-term rates, but that slows down the money creation process. But typically, for whatever reason, when you see long-term rates heading back up and the spread between long-term and short-term getting higher and higher and the wider apart, after it being negative for so long, that is generally the signal for a recession. You'll see, if you look at the chart, you'll see it in the early 90s, you'll see it in 2000, see it 2008, same thing over and over again. Once the curve goes negative, that doesn't trigger the Keynesian recession, whatever they want to call it. It's when that yield spread goes higher that the recession actually hits in. And when you have a Keynesian style recession, the move is to print even more money. That's the strategy. That's what they always do. That's what Keynes says to do. When you hit a recession, you have to plug in the difference with more government debt. So, what happens this time when they do that? When consumer prices are already rising by 3.3, 3.4%, whatever it is. So then you print even more money, and then they start rising by 6, 7, 8, and they don't stop. And we could very easily be in a crack-up boom situation very soon, very quickly. I mean, and we hear these sort of end-of-world type of headlines. One came out today, like Hegseth is calling all generals from everywhere in the world and telling them to meet in Virginia or something. I mean, these clusters of nerve-wracking headlines come in tandem with big economic events, usually, either because that's the nature of how the world works or because somebody's planning it. I tend to go towards that's the nature of how the world is. When money is a problem, people do crazy things. Powerful governments do crazy things, and they endanger the world. I think the world's going to be fine, but we have quite a bit of acrobatics to do from here. And let's do it and see how many flips we can do before we land.
To understand why silver could become the last asset standing, we need to start with one of the most dangerous concepts in economic history, the crack-up boom. It sounds dramatic, and it is. It's what happens when a currency begins to fail, when inflation isn't just a policy mistake, but a symptom of deep systemic collapse. And right now, that's exactly what we're seeing. The Federal Reserve is slashing interest rates into rising inflation. That's not just reckless, it's desperate. They're trying to keep the banking system alive by injecting cheap money, but all it's doing is feeding speculation and crushing confidence in the dollar. That's the crack-up boom. A frenzy where people dump their currency as fast as they can, buying anything real, anything that might hold value. Real estate, gold, farmland, and silver. Because in a crack-up boom, it's not just inflation, it's the breakdown of faith in the system itself. We're already seeing signs. Silver is up 30% this year. Physical demand is surging. Investors aren't waiting for headlines, they're moving now. Because once that final wave of panic sets in, once the world realizes the dollar can't be saved, silver won't just rise. It will ignite.
I don't know exactly, but what I would guess is a big part of it is I just right like maybe a minute or two before we started the interview. This interview, I was looking at Yahoo Finance, and a lot of the head articles are like the Fed is worried about this. This Fed member is talking about that, changing the benchmark interest rate or how they control interest rates or what interest rate to target. It's like the Fed FOMC board or whoever votes on it, they're usually monolithic and they all say the exact same thing to the media. It seems that they're starting to get a little bit frayed and there's starting to be a little bit of independent thought, like, independent thought alarm. Everybody start worrying about the dollar. Like, when the dollar is run by a bunch of central bankers that have different ideas and they're all getting nervous, then that's when the dollar is shaky. It's what do you say? It's a coincident indicator. It's not leading or lagging. It's like when the central bankers get nervous, the dollar is getting a little bit shaky. And if you want to do an interesting research project, I've done this before. Look into the Federal Reserve website, and they have old transcripts from the 1970s and early 1980. They have transcripts word for word, not the minutes. They have the minutes too, but every word that was said, dialogue between Volcker and his little minions, what they were saying. They were like nauseous in late 1979, early 1980. They had no idea what to do, and they were all freaking out and asking Volcker for leadership and just to calm them down. So that's what the Fed is stepping into now. They are forced to cut into an accelerating consumer price inflation environment, and this is making them nervous because they know it can't work. That there's nothing else that they can do. Because if they don't, the banks are going to collapse, and if they do, the dollar is going to collapse. And they're headed into that choice now. That's where they're going, and they know it, and they're getting nervous.
The Fed's latest move confirms it. They're cornered. In September, they cut rates by 50 basis points, dropping the federal funds rate to 4.25 to 4.5%. But inflation? It's still running hot at 3.5%, well above their 2% target. That means they're cutting rates into inflation, not after it. Why? Because they have no choice. The banking system is too fragile to withstand higher rates. They know that if they hold firm, regional banks will start toppling again. But by caving and cutting, they're lighting a fire under inflation and sending a signal to the world that the dollar is no longer sacred. This is the Fed's no-win scenario. Protect the banks and destroy the dollar, or save the dollar and watch the banks collapse. Either path ends in chaos. And silver? Silver thrives in that chaos. As the credibility of central banks crumbles, silver doesn't just rise on inflation. It rises on fear. Fear that the system is broken. Fear that the money in your pocket is losing value by the hour. And the more the Fed panics, the clearer that fear becomes.
I'm not even sure the Fed understands this. It's a matter of basic arithmetic. It's not that complicated. I see these articles over and over, like they're saying, like, what's the amount of reserves that is ample or appropriate for the banking system? Well, it used to be zero because the repo market wasn't really a big thing. But then once 2008 hit and they had to buy all this dead debt, and then all that dead debt turns into reserves, which they have to keep cycling through to keep the balance sheet big. So you have all this ghost debt that can no longer be paid back, but it like lubricates the pipes inside the main aorta of the banking system. So the basic arithmetic goes like this. It's that there's like $2.9 trillion being traded every night between banks for reserves in exchange for treasuries. And then you come out and one of the Fed members said, well, I think the appropriate number for reserves is 2.7 trillion. I don't think we're going to hit any problems until 2.7 trillion. But like, I look at that, I'm like, seriously, you're going to like say that in public, 2.7, but then what about the 2.9 trillion that are being traded every night? Like, how does that work? How do you trade $2.9 trillion every night with 2.7 trillion in reserves? This doesn't, the math doesn't add up. There's $200 billion missing. So what do you say to that? Like, either they have no idea what they're talking about, or you can trade more than the amount of reserves in the system every night through some kind of mechanism that I've never heard of and I don't understand. Maybe. I don't think that's going to happen. But the point is that reserves are now like 3 trillion, almost 3 trillion flat, because the Treasury has been raising a bunch of dollars and they get that from bank reserves. And reverse repos are now basically zero. So nothing can come from that box of money back into the bank system. It's pretty much empty. So, when we hit September 30th, which is only 5 days from now, when repo generally spikes for whatever regulatory reason that it does, it doesn't even matter, but it does every quarter end. So we're probably going to have repos above $3 trillion in volume with reserves below that. So what happens is that you have to bid higher for repo cash, higher than they want to control interest rates for. So that's what happened in the repocalypse. That's what I think is going to happen now. If you have more repo trading volume than you have reserves, I mean, there could be a mechanism I just don't know about, some kind of magic money box that exists somewhere that I never heard of, but that's what I think is going to happen. I think interest rates are going to go up next week.
Confidence in the US dollar is quietly unraveling, and the cracks are no longer subtle. The dollar index has dropped 5% this year, now sitting at 95.2. That may not sound like much, but in currency markets, that's a landslide. Foreign governments are watching closely, and they're not waiting around. Central banks added 5 million ounces of silver to their reserves in 2024 alone. Why? Because they see what's coming. The dollar isn't just weakening, it's entering a death spiral of trust. The moment a currency is seen as unstable, it's game over. That's what this analyst means when he says the pyramid is about to vanish. The dollar sits at the top of every global asset. Bonds, equities, even commodities are all priced in it. So when confidence breaks, the collapse isn't linear. It cascades. And in that kind of environment, people rush to what they can hold in their hands. Gold is already surging. Silver is racing behind it. And unlike the dollar, silver doesn't rely on trust. It is the value. That's the shift unfolding right now, not just out of fiat, but into the only forms of money that can't be printed into oblivion.
Yeah, it's not. It's above 3%. So they used to talk about something called symmetrical inflation, where you try to get it above because it's been below too long. You haven't heard that word come out in the last few years. Haven't heard anything about symmetrical inflation at all. This takes me to they're running out of academic excuses because they know that people are suffering. I mean, the rank and file, average Joe type of American is not going to have that much savings, and he's going to be really hurt by these price increases, and they are being hurt. And there's really nothing the Fed can do about it right now. And since they're out of their techno babble, macroeconomic, econometric excuses for what's going on, this is where things get visceral and things get a little bit scary for them. And with Trump on the attack, also they're being attacked from that direction. I'm not saying the attacks on them are good or bad. It's just I wouldn't want to be a central banker right now. I kind of feel bad for them, but I don't. It's like when your enemy finally gets his comeuppance and you've been thinking about it for a long time. When you see it happening, it's like, it's not so nice, but there's nothing you can do. But you're on the other side, and that's good. You made the right choices, and now you just have to live with watching other people fall, including central bankers. And all right, I enjoy it with maybe 5% of my, Schadenfreude type of personality, but mostly.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
Silver isn't just riding the coattails of fear, it's becoming the lifeboat. And here's why that matters. Silver plays a dual role that no other asset can match. It's both a monetary hedge and an industrial necessity. In other words, it's valuable in crisis and indispensable in the real economy. That's what sets it apart. When the dollar fails, silver rises as money. When economies rebuild, silver is needed to power the technologies of the future: solar panels, electric vehicles, and advanced electronics. And right now, that dual demand is converging. Physical silver demand is breaking records. Industrial users are scrambling to secure supply. Investors are piling in, not just for profit, but for protection. With gold already commanding center stage, silver is stepping into the spotlight as the affordable alternative. And if trust in fiat is evaporating, people aren't going to flock to $1,000 gold coins. They're going to silver. Portable, liquid, and still massively undervalued. That's why this moment is so critical. Because in a world losing faith in paper promises, silver becomes not just a hedge, but a necessity.
Yeah, you'll find a play-by-play. Basically, I'm trying to entertain myself and calm myself down and be positive about what's going on, all wrapped up in a little, package. I'm a back end observer, so I'm looking at the pipes of the system, where the money flows are going. Those huge pipes of trillions of dollars moving every day. So I'm looking less at the little minutia and more at those big pipes, like where are they being reconnected to, what is going on, can they fit? And I think we're close enough to the breaking point that it could be weeks. I think it's not going to be more than a year. I realize I've said that before, but it's the way things are accelerating now. It's crazy. What you're hearing, and you look at the price action. Look, if you want some entertainment and to be calmed down as this is progressing, check it out.
The action on the COMEX tells the real story. Silver's paper market is boiling over, and behind the scenes, the big players are preparing for something massive. Open interest is up 15% year over year. Net long positions now sit at 62,000 contracts. That's not just bullish, that's explosive. Traders are positioning for a breakout, and they're doing it fast. But the real signal isn't in the futures, it's in the vaults. In September alone, 1.2 million ounces of physical silver were delivered out of COMEX warehouses. That's not normal, that's a run, a silent stampede away from paper silver and into physical metal. And once that metal leaves the vault, it doesn't come back. It goes into private hands, sovereign reserves, and strategic stockpiles. It vanishes from circulation. And with silver prices still hovering just below $45, that demand is accelerating, not slowing. Because when institutions start to fear counterparty risk, when they stop trusting that their paper contracts will actually deliver, they don't hedge, they hoard. And that shift from speculation to survival is exactly what we're seeing right now.
Yeah, you can't. It's not possible. All fiat currencies today are based on the dollar. That's when any country hyperinflates, what do they do to restabilize themselves? They repeg to the dollar. That's exactly what Israel did in 1985. It's exactly what every hyperinflating currency does. That's what Argentina is trying to do right now. They just did a $20 billion currency swap. That means that pesos are backed by dollars. That's what it means. That's a currency swap. This is how the dollar prolongs the hyperinflationary process in every country. But there's nothing that can prolong the hyperinflationary the hyperinflation of the dollar itself, except for the fact that it occupies that space as the reserve currency. That's the only thing that's stopping it. But once that goes, everything happens very fast. Oh, absolutely. That's still my view. So yeah, what exporting inflation does is it delays the inflation. Well, when I say inflation here, I mean rising consumer prices. It delays the effect on rising consumer prices because you're exporting all those dollars outside your country, but they're still there. And when they will be sent back because China doesn't use dollars. They use yuan. That's their currency. So they have no direct use for dollars within their country. So then when the dollar is losing value, the best they can do is send it back to the source. And every country will do that at the same time. So yeah, all of the delayed inflation that the United States never experienced all comes to its door in a sudden flood of reversing the whole reserve currency situation. Has to be reversed, and it's not going to be gradual. It's going to be very sudden.
Beneath all the market noise lies the real threat: liquidity. And right now, the U.S. financial system is skating on a razor's edge. The repo market, Wall Street's hidden engine, has hit a breaking point. Nightly volumes are nearing $3 trillion, matching the total reserves in the banking system. That's an unspoken red alert. Reverse repos, once a crucial buffer, have collapsed to near zero. There's nothing left to absorb stress. And just like in 2019, we're heading straight for a spike. On June 30th, volumes hit $3.1 trillion. September 30th could be worse. If that spike hits, repo rates could explode, just like they did in the repocalypse when they jumped to 10% overnight. And when short-term rates spiral, the whole credit system chokes. Banks freeze, lending stops, and assets start liquidating en masse. This isn't just a technical glitch. It's systemic fragility. And silver? It thrives when the system buckles. When liquidity dies, people dump paper and grab what's real. That's why silver demand jumped 10% after the March 2025 bank scare. And it's why every dollar pumped into the system today just feeds tomorrow's panic. The fuse is lit. The blast radius just hasn't reached the surface yet.
Yeah. When you say duped, I don't think that people get duped and you convince them in like some speech by some politician on CNN or whatever convinces them, oh, we're going to try this credit derivative and it's going to work. It's not that people get duped in that way. The dollar built itself on many decades of legitimate commerce in the 19th century and early 20th century, and it was convertible. You could go to any bank and get your gold for your dollars, and there were problems but they weren't as big as now. So for example, when Germany and when Weimar was, let's say, duped by the Rentenmark, they weren't, because ultimately it went back to dollars, and through some kind of derivative chain, the Rentenmark was saved by the dollar. But when you're talking about the dollar itself falling, there's no other derivative to build a system on, because that is the base credit derivative, again, reserve currency. When that falls, it's not a matter of not being able to dupe. If you look at the pyramid and then you take out the second layer of it, what are you possibly going to build a credit derivative based on? What? It can't be the dollar. It can't be anything else. It would have to be gold. So you'd have to have a currency that has been traded convertible to gold for long enough that people would actually say this is a convertible currency, because people are going to be so sick of paper money and derivative money, derivative credit for after this goes to hell. They're going to be sick of it. And they're not going to want to go back until I would say a full generation, maybe 20 years, that we're going to be trading money. And that's really going to slow things down. It's going to change life as we know it. I think it'll be okay, but it'll be very different from what we know now.
Silver miners are quietly becoming the high-octane play of this unfolding crisis, and the numbers don't lie. The Global X Silver Miners ETF is up 25% this year, and individual names like Pan American Silver and First Majestic are posting 30 to 35% gains, outpacing the metal itself. That's the leverage effect at work. When silver moves, the miners move harder. But with that reward comes volatility. production costs have jumped 15% since 2024, squeezing margins. But the surge in silver prices has more than compensated. Analysts are racing to upgrade these stocks, calling them undervalued in light of silver's rally. Institutional money is taking notice too. SIL ETF inflows are up 10% in Q3. And here's the real kicker. If silver breaks $50, some experts see mining equities doubling or even tripling, but not everyone's playing this game. Risk-averse investors are still opting for physical silver. Because when systems shake and markets wobble, they want certainty, not quarterly earnings reports. That's the divide unfolding now. Speculators chasing silver equities, stackers hoarding the real thing. And as this financial reset accelerates, both sides are betting that silver's role is about to explode.
I would say just forget about the dollar amount. Don't use mining stocks as a way to increase your dollar stacks. The reason I hold mining stocks is because, first of all, I don't want to have only bullion. That makes me nervous because I don't know where to put all of it. I have enough for what I think will get me and my family through the end game. That's all. In a modest way where I'm not going to be ostentatious or anything. I have no desire for that. It would be dangerous and also insensitive, and it's just not my personality to do that. So, where am I going to put anything that I don't need for the end game, for end game needs? I would put it in a company that I know can pay me dividends in a new monetary system. So when I buy a miner, I'm thinking I want to buy a central bank, and then maybe bequeath it to my kids when 10, 20 years from now when this is all over. And it will definitely be over 10, 20 years from now. I have no doubt about that whatsoever. I want a piece of capital that produces money, because at the end of with this end game, I don't think we're going to go back into fiat. I don't think it's going to be possible. We're going to have to deal in gold and silver for as long as it's going to take to rebuild trust in some kind of credit derivative of gold and silver. But it's not like people are going to immediately go back to paper because look what just happened. It's going to take a long time. And in that time, you're going to want to have companies that can produce gold and silver and pay you dividends in the money that's going to be for the world.
It all comes back to the pyramid, the invisible structure propping up the entire global economy. And at the very top of that pyramid, the US dollar. Every bond, every bank, every commodity priced in dollars rests on the assumption that the dollar will hold. But what happens when that assumption dies? We're about to find out. The Fed's rate cuts, the crumbling confidence, the repo stress, it's all part of the same collapse. A structure built on trust is disintegrating, and when the foundation crumbles, the fall is instant. This is why central banks are buying metals. This is why silver is quietly breaking free. And this is why the analyst's warning feels different this time. Not because it's dramatic, but because every layer of the system is flashing red. From inflation data to COMEX vaults, from banking stress to ETF inflows, it's all pointing to a singular truth. Fiat money is breaking. And when fiat fails, people don't wait around for politicians to fix it. They move into hard assets. Gold takes the spotlight, but silver? Silver becomes the people's currency, affordable, accessible, real. And as the pyramid falls, it may be the only thing left standing.
I mean, obviously it would, because you're talking about the number one and number two trading partners of goods and services in the world. So if the accounting of one of those countries goes to hell, then obviously it affects their trading partner across the ocean because they're doing business. There's only one banking system in the world because the dollar is the reserve currency. There's two sides. That's a double-edged sword. In a reserve currency system, you get to export your inflation, but then when that stops, then all that exported inflation has to go back to the source. It doesn't disappear; it just moves. Right? All the inflation that has been created since the dollar became the reserve currency is all still there. Debt from the 1950s and 60s, it's all still there. Why? Because it has to be rolled over. It can never be extinguished because we're not on a gold standard. There's no debt can be extinguished. This is what Keith Weiner talks about a lot. That without gold as the money or as the statutory money, I know it is money. I know naturally it is, and it still is. But without gold as the final extinguisher of debt, debt can only be rolled over. You're forcing yourself into a Ponzi scheme. There's nothing else you can do. So all the debt from the 1930s, 40s, 50s, ever since the dollar and gold were no longer convertible, it's all still there. It's in the form of bank reserves just rolled over decade after decade after decade, and it's all going away. And it goes away when it gets devalued against real money, which is gold. And then all those trillions of dollars of debt held by every country, all the trading partners with the dollar at its base. It's all one banking system controlled by different little central banks all over the world, but basically one banking system with the dollar as the reserve currency and gold underneath the dollar. And then when the dollar falls, all the currencies on top of it fall. And the entire banking system of the entire world that has now the dollar as the reserve currency, they all fall, everything.
Silver isn't just reacting to chaos, it's being reborn because of it. As the global financial order teeters, what was once dismissed as a secondary metal is emerging as a pillar of monetary survival. The analysts' warning of a dollar collapse weeks away no longer feels like hyperbole. It feels like a countdown. Central banks are panicking, the Fed is trapped, and the very fabric of fiat is coming undone. In that kind of world, silver isn't just a store of value. It's a declaration of independence from a collapsing system. And while gold may grab headlines, it's silver that the masses will turn to when the smoke clears. Its time has come. If you're watching this, don't just observe the shift. Be part of it. Hit subscribe so you never miss these critical updates. And remember, this is not financial advice. Always speak to a licensed professional before making any investment decisions.
Yeah, this actually is in my research. I was pointed to a video by Phil Lowe of the Bitter Draft of a Chinese man explaining why China is actually going to be one of the poorest, or the poorest, biggest country in the world once this monetary system resets, once the dollar collapses. People want to believe, or the orthodox opinion is like, well, China's supplying all the goods, they're going to be fine. But it's not going to be that way, because the wealth that they've been stacking, which is basically US dollars in their basement. The US dollar itself, if that dies, then all of the wealth that they stacked is no longer worth anything. So then what do they have? And his point in this video that he made was that imagine if you have all this capital, but it's locked behind a door and you can't get in it. He used the example of a grain silo, but nobody can get in the silo to use the grain. And if you try to get into it, the government will kill you. So that's what it's like in China. Like they have capital, but they're not allowed to do anything with it because they have this crazy mercantilist idea that all you have to have is the capital that just sits there, and then that's your wealth, and then the government doesn't let you use it at all, and then you're supposed to just be wealthy. So they have this like infantile idea of what wealth is. You could say all Keynesians do, but then the vehicle of that wealth, right? It's just like logging in and looking at your stock portfolio and you see a certain dollar amount, but then how much of that is inflated valuations? You don't even know because the yardstick is all messed up. So in China, the government has been like basically forcing people into investing their savings into housing for decades. So what happens if everybody's doing that because they have to, and then all of a sudden housing prices fall? So everybody was never, it's not that everyone suddenly becomes poor, as the fact is that everyone's revealed to have never have been rich in the first place. So if you look at you could just go to tradingeconomics.com. That's how I found all this stuff. Trading Economics, you get an account with them. You look at all the entire housing section of the China tab, and you graph after graph after graph. Everything's below zero. The prices are going down. The building permits are going down. Everything is in negative territory. Everything. So with China, sometimes it takes some time for these negative price swings to infect the banking system. The banking system, I'm telling you for sure, is infected. It's just going to take time for someone to keel over and die, and then for the next one, after the first one goes, the next few are just going to be right in line, and then you'll see there's a crisis in China, and that should bleed over into the West, and the West has its own problems. It looks like everything's timed for some kind of demolition or detonation all at the same, within a very short amount of time now. The dominoes are going to start falling if they aren't already.